Do you think the price advanced because of this triangle pattern, or here the price declined because MACD gave a sell signal? No, these patterns, indicators, tools, and generally technical analysis are after the fact. They are used to react to the market. They don't cause any movement. The movement of the price is because of other reasons like imbalances between supply and demand, fundamental factors, news, economy, politics, and more. And the main players in the market, I mean the ones who cause considerable change in supply and demand and so significant change in the price, are institutional traders, banks, hedge funds, and other large financial entities that buy and sell in financial markets with very, very large capital. And when this huge amount of money is flown into the market, they cause considerable movement in the price. This money is called smart money. In the past, smart money was a term used in casinos referring to wagers made by gamblers who were famous with good track of success. But today, smart money is also used in financial markets, referring to the capital that is being controlled by institutional traders, central banks, funds, and other large financial organizations. On the other side of the smart money, we have not so smart money or dumb money. Small retail traders like me and you are labeled dumb money. So dumb money is referred to retail traders with small and limited capital who are in the market for short-term speculations. So if retail traders could track the smart money and trade in the same direction that the smart money is flowing in the market, they have a very high probability of success in the market, because as I said, when the smart money enters or exits the market, it causes considerable movement in the price. There are different methods for tracking smart money like ICT SMC trading method, volume analysis, studying hedge fund databases, and news and market sentiment analysis, and also some technical indicators. In this video, I want to introduce a new indicator on TradingView that can help you with tracking smart money, and then I will teach you how you can combine it with a volume indicator to increase the probability of finding the best trading opportunities in the market. To add this amazing indicator to our charts, here we click on indicators and we search smart money interest index, this one, which is written by Algo Alpha. Alright, this is the indicator, and as you can see, it's added here below the charts. As you can see, we have a histogram which is on one side and one color, green, and as the name of the indicator is indicating, it's an index showing the interest level of smart money. We have also a yellow zone here, which is the high interest threshold. When the histogram is in this level, it shows significant interest from the smart money. Here in the settings of the indicator, here in the inputs tab, the threshold for high interest is set at 0.9 by default, which for volatile markets like Forex and crypto, this is a good level, but for some less volatile markets like stock market or indices, you may need to decrease this level. Alright, at the core of this indicator, there are negative volume index and positive volume index, which are used for analyzing the smart money and dumb money. Negative volume index is a cumulative indicator that was developed by Paul Dysart in 1930. This indicator uses the change in the volume to know when the smart money is active in the market. And positive volume index, created by the same author, is an indicator that is calculated based on price movement on periods with increased volume, and this is used to identify when dumb money is active in the market. This indicator uses both of positive volume index and negative volume index as a base for identifying when smart money or dumb money is active in the market, and then for both of them, by the help of RSI relative strength index, it makes a ratio that can show buying or selling pressure. It also uses a long-term peak normalization to ensure that the index remains relevant. Here in the settings of the indicator, this volume flow period, which is set at 14, is actually the RSI period for buying and selling pressure of the smart money and dumb money. This is normalization period, which is set at 500. It's for ensuring that the index remains relevant. If we decrease it, the sensitivity of the spikes in smart money interest will be increased. And this is the index period, which is set at 25 by default, and this is actually the main look back period for the indicator to calculate the index. If we reduce it, we will have shorter term spikes of interest. The default settings generally work very well, unless depending on your trading strategy, you may need to adjust them. For the strategy that I'm gonna explain, the default settings are fine, so I don't change anything here. Alright, so as I said, When the index, this green histogram, reaches to this level, it shows high interest by smart money. So we expect that a considerable advancing or declining is going to happen after this situation. But this is a general signal and not fine-tuned for a trade entry. So we need to add another indicator that can help us to enter in the best price with minimum amount of risk. Here we click on indicators and we search relative strength of volume indicators by DGT, this one, which is an editor specs indicator and written by someone named DGTRD. Alright, this is the indicator, and as you can see, it's added here below the chart. The bottom part, which is a simple volume indicator, and in the upper part we have RSI and also a volume indicator in the context of RSI. This indicator is one of the best volume indicator on TradingView platform. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it later and learn this powerful volume indicator. Alright, for our trading strategy, we need to change some of its settings. So here we go to the settings of the indicator, and here for the length we set it at 9, and here for histogram companion we set it at moving average, and then here in the style tab we remove relative strength of volume because in our strategy we only need RSI, and for overbought lower threshold we set it at 70, and for oversold higher threshold we set it at 30. And for the middle line we change the color to yellow so we can better see it on our charts. Alright, everything is already set on the chart, and let's see how we trade based on the setup for tracking the smart money and entering a high probability trade. As I mentioned earlier, in this indicator, when the index, this green histogram, reaches to this yellow level, it shows high interest by the smart money. In other words, it shows that probably their large capital is flowing in the market. When we have the histogram in this yellow level, we wait until it goes down and we have it below the yellow level. When this happened and the histogram is already below the yellow level, here in this indicator, here the volume bar color should be gray. If it is not gray, we wait until it becomes gray. When the bars are gray, they show that the volume is below the average and we have a period of low volatility and probably flat market on the chart. You may ask why we should have gray, or we must wait for gray bars before entering a trade, because this is where that usually smart money enters in the market. They enter in the market when the market is calm and experiencing low volume and volatility, and after that when they initiate the move, that's the retail traders who enter in the market and take the price further in that direction. And many of the times the retail traders just enter in the peak of the market in terms of price and volatility, and that's where the institutional traders exit the market, and again causing a considerable move in the opposite direction and leaving many retail traders in loss. So as I said, when this histogram gave us the signal that we have high interest by the smart money, we wait until the histogram goes below the yellow level, and at the same time here the volume bar should be gray, and if it is not gray like our example here, we wait for gray candles before doing anything else. Now that we have gray candles showing that the market is experiencing low volume and volatility and probably it's flat, we wait for the volume bars to go above the average, where the volume bar is above this average line. This orange line is the average. In this indicator, the bar turns to red or green when it's above the average. We don't pay attention to the first one because this can be still affected by the prior flat market, and we focus on the second one. For the second one, when this candle is closed and so the bar is closed, if we still have it above the average, then here our RSI will help us to know which direction we should enter. We don't care about the color of these volume bars. Here their level below the average or above the average is important for us, and for direction of the market we check RSI. So for the second bar, which should also be above the average, as you can see RSI is above the center line. So this is an opportunity for opening a long position, and we can enter a long position here at this point when this new candle is opened. The stop loss below the previous swing low, and if you feel it's too close to your trade entry because in this example, the market was in a tight flat market condition. As you can see, you can set it farther away from your trade entry, and the profit is set at the level that makes risk to reward ratio equals 2. This is the minimum and low risk profit target, and depending on your trading experience, you can stay longer in your position and get the most out of your position. This was a setup for opening a long position, and let me also show you an example for opening a short position. Here you can see that the histogram again went into the yellow level, giving us the signal that we have high interest by the smart money. As I said, we wait until it goes down and it is below the yellow level. When this happened, in this indicator, the bar should be gray. If it is not gray, like our case here, we wait until we get gray bar. Depending on the market condition, it could be one gray bar or more than one gray bar, like our example here. Then we wait to have a bar above the average. When we get the second bar above the average, we check RSI for direction of the market. Here you can see that RSI is below the center line. So this is a signal for selling, and we can enter a short position at this point when this new candle is opened. The stop loss above the previous swing high and the profit at risk to reward ratio of 2. As I mentioned earlier, this indicator gives a general signal that we have high interest from smart money. It is not a precise signal that you should enter now. If you check it on your chart, you can clearly see that most of the time when we have this situation, sooner or later the price considerably moved in one direction, and by the help of this indicator, we try to know where we can enter a trade that the market is ready to go in that direction with high probability. Please pay attention that this setup doesn't give you 100% guaranteed signals. No trading strategy is capable of this, and losing trades are always part of the game, and you need to manage your risk properly. I recommend using 1% roll risk management strategy, which is one of the best risk management strategy that you can use. By the help of this strategy, based on your stop loss level, the size of your position is calculated in a way that you will lose only 1% of your trading account in case if the price hit your stop loss. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it because without a proper risk management strategy, you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.